FTX founder Sam Bankman-Fried was sent back to the Bahamas jail in a day of courtroom chaos. Some crazy stuff went down in court in the Bahamas today, and I want to break down exactly what happened. Is Sam getting extradited to the US? It looks like there was a bit of a backflip today amidst courtroom chaos and a lot of confusion, even from the judge themselves. As well, in today's show, I want to go over a market update. Lots and lots and lots has happened over the weekend. We've had news from the Grayscale Bitcoin Trust. We've had Binance acquiring Voyager assets. We also had a breakdown on the Bitcoin charts, which I think is very important to talk about right now. So it's been a crazy weekend. We have a lot to discuss, starting with the Sam Bankman-Fried news. Of course, I'm your host, Miles. Let's get straight into the show. So FTX founder Sam Bankman-Fried sent back to the Bahamas jail in a day of courtroom chaos. FTX founder SBF was sent back to Bahamas on Monday in a chaotic courtroom scene after a reported plan for him to waive his extradition to the US stalled. However, multiple media reports later in the day said that he had told his Bahamian lawyer to proceed with extradition hearings. He's now expected back in court later this week. So basically what happened was over the weekend, we all thought that Sam was going to get extradited on Monday when we found out that he had a court appearance. However, when they actually got into a court, it painted a very different picture, as in open court, Sam was dressed in a blue suit with a white button-down shirt, and he was visibly shaking. People in the audience said that he was physically shaking his leg, acting very jittery, acting very weird. And the Bahamian defense attorney, Jerome Roberts, told the court that he was shocked that Sam Bankman-Fried was actually in court, as I did not request him to be there this morning, the attorney said. So Franklin Williams, the Bahamian prosecutor, said that he understood that SBF intended to waive extradition. However, when they actually got into court, SBF was requiring more proof of his US criminal charges documents before requesting extradition. So SBF himself actually backflipped in court, which resulted in him getting sent back to jail in the Bahamas instead of going to the US today. And we do believe that Sam wants to go to the US. He's in very bad conditions in the Bahamas reportedly. And I mean, obviously off the back of that, he was shaking in court. Doesn't look very happy. This is a photo of him in court today. And he was escorted back to jail by the Bahamas police to spend another night in a Bahamas jail. So Tiffany Fong said, after a few days in jail, SBF prematurely showed up to court this morning, hoping to be extradited to the US, but the judge deemed SBF's appearance a waste of time and sent him back to prison. They essentially went to court. He demanded new documents, which was a weird thing to request if you want to get extradited. And then he was sent back and is now expected to appear in front of court next week. And said BitBoy was actually one of the people that was lining up to watch this hearing. A lot of people actually went to the hearing to watch SBF. BitBoy even said that Sam looked him in the eyes and shook his head, looked quite angry, which is quite funny. And he says, people think SBF is paying the Bahamas off. You couldn't be further from the truth. Sam and his parents are broke. The Bahamian government has stolen their assets. You can't come to the island and expect to out-pirate the pirates. So an interesting accusation there. Now, a lot of people wondered why there was a holdup in the SBF saga. BitBoy seems to think the reason why the whole extradition was held up is because of Rebecca, a local resident that was one of the creditors to FTX, so lost money in FTX and is now owed money. Apparently, she filed a court file against SBF, criminal charges against SBF, which added to his case, which essentially resulted in the proceedings being slightly drawn out. I can't really verify this. I don't know the truth of it, but BitBoy is certainly claiming the extradition being pushed back on him and Rebecca's good work. Once again, I don't know how much I'd read into that, because all reports from the Wall Street Journal and Bloomberg allude to the fact that the reason why his extradition was put back was because of the new documents that he requested. So it's very, very weird, because it was understood that he intended to waive his extradition, and then he said he needed documents, including the US indictment document, to review with Mr. Bankman-Fried before his client could make a decision on whether to waive any objection on his transfer to the US. This is another picture of SBF leaving the magistrate's court in Nassau, Bahamas today. Once again, does not look very happy. I wouldn't be either, sleeping on the floor after defrauding billions of dollars from consumers. Mr. Bankman-Fried has been in custody since his arrest a week ago and has been held at Fox Hill Prison, a Bahamas facility that has faced criticism for its conditions in the past. Apparently, the conditions are very, very bad, but his lawyer and himself have come out and made some really strange requests over the past few days. For example, he asked to be fed only vegan food. He asked for custom bedding. Apparently, just a lot of weird reports that you'd expect from someone that's used to living in a $40 million Bahamas penthouse in Albany. So if and when Mr. Sam Bankman-Fried arrives in the US, he will likely appear in federal court in New York, where he would be arraigned and expected to enter a guilty plea. He is likely to initially be held in federal jail, although his lawyers could make an application for him to be released on bail. So all reports are suggesting, although he was sent back to jail in the Bahamas today, that we can expect him to be extradited to the US at some point. Once again, I think that he would really be in favor of being extradited, given the poor conditions that he is currently in. Obviously, he is facing a very harsh sentence in the US, over 100 years, as per some reports. We're going to see if he can get that lower. I don't expect him to serve 100 years, firstly, because it's kind of like that would be an unprecedented sentence. I still do think they'll want to make an example of Sam, but potentially he can give some information that leads to another member's arrest, or they might be a little more lenient considering his age and the fact he's committed no past crimes. So let's see exactly what happens there. But to kind of wrap up today's courtroom hearing news, he was sent back to the Bahamas. He's going to have to spend a few more sleepless nights there before he heads over to the US, if that extradition is approved. But I'm sure there'll be some more hiccups in the SBF saga, because today was very, very weird. As I said, they said he was in the courtroom visibly shaking, looking very anxious, looking very worried. Don't know if this is just one big act or if he's going loopy after not being on his medication, but very weird scenes out of the Bahamas this morning, and a weird backflip from his lawyer requesting more documents as well. Now, we have a lot to talk about in terms of the market today. The first thing I want to talk about is DCG, because over the weekend, we had a big market dump, and some of the tokens that were performing the worst on the market were the DCG tokens. And I did a show over the weekend to say, be wary of these tokens because they look extremely weak. And since then, they're down even more. Filecoin down 7% today, Stacks down 5% today, Flow down 4% today, NEAR down another few percent today. And if we look at the assets that DCG, Digital Currency Group, holds or has exposure from their venture arm, we can see that these assets are significantly underperforming the rest of the market. Obviously, Filecoin being one of their major holdings, Near Protocol, Ethereum Classic, the Graph, all of these projects performing significantly worse. And there's been a lot of speculation as to what will happen with DCG. And as I said on the weekend, I can't tell you exactly what will happen, whether Genesis will declare for bankruptcy, whether DCG will be required to pay its loan back to Genesis, whether they will restructure. However, we did get some news today that might allude to a potential scenario. And this is the news that they are weighing a tender offer for 20% of its shares in the deeply discounted Bitcoin Trust. So one of the speculative ways that they could potentially raise capital is to unwind the Grayscale Bitcoin Trust. Today, we're getting allusions towards this potentially being the case, as they are looking for an offer for 20% of the trust, which would obviously free up some liquidity, which could prevent forced selling of assets like they have been presumably, or at least likely to have been conducting over the last week, as we can see by a lot of their assets dropping hard. So Rand said DCG have been dead silent since Genesis lending collapsed, despite tons of speculation that they may have to unbundle. Today, they broke their silence, so they haven't actually addressed the public on the current state of DCG in a while. We know Barry Silbert was trying to raise capital, but has largely been unsuccessful to this point. They broke their silence today with a strong Grayscale campaign. It feels like they're positioning for a sale. Now, why else would you come out and say you're weighing up a tender offer without considering a sale, a full length scale of the Grayscale Bitcoin Trust? Now, I do think this has implications for Genesis and the trust itself, because they came out and said, if we're not successful in our legal challenge in all applicable courts, and we conclude there is no possible of legislative or regulatory clarity that would allow for the conversion of a GBTC to an ETF. If you guys don't know, they have been positioning for an exchange-traded fund, a spot Bitcoin ETF, which essentially means they hold spot Bitcoin in their treasury, not futures, and essentially people can buy into that much closer to NAV, because then they're actually getting the underlying asset Bitcoin itself. But obviously, the SEC has been very opposed to issuing a spot Bitcoin ETF, despite approving the futures ETF. This would allow a spot ETF for conversion of the GBTC assets or shares for Bitcoin itself. And I do expect if they did get an ETF, this would result in the discrepancy of the premium to NAV leveling out closer to zero, because right now it's really nosediving. It's almost at 50%. However, it doesn't look like that's going to happen. And that's why we can see such a discrepancy in the share market price of Grayscale Bitcoin Trust shares to the current Bitcoin price, because it doesn't seem like the SEC is any more inclined now than they were a year ago to actually approve a Bitcoin spot ETF. So this may force Grayscale into unwinding a portion of GBTC's capital. So essentially, they affirmed that the firm is still determined to get its application approved. Whether they're determined and the SEC will approve it or not are two very different stories. The SEC has still not approved any spot Bitcoin ETF in the US. Only Bitcoin's futures ETFs, which are tied to bets on the future price of Bitcoin rather than the current price, which, just for my opinion, by the way, I think it's very stupid, because if anything, a spot ETF is less risky for investors than a futures ETF. But clearly they're just making kind of some anti-crypto stance, or they're trying to like push other legislation through before they make an approval. But it's just very weird that it hasn't been approved, considering many other countries have now approved spot Bitcoin ETFs. Like even Australia was approving a spot Bitcoin ETF. The US is lagging behind on this. So it's very interesting from Grayscale. It does look like they were unsuccessful in raising capital for the underlying business, DCG, and it does look like they are now open to selling some of the Grayscale Bitcoin. This may have implications for the premium, which is now at a minus 49% discrepancy, which essentially means, if you don't know what that means, you can buy Bitcoin. So you can buy the underlying net asset value of Grayscale's Bitcoin for 48% less. So essentially, if Bitcoin's $20,000, let's just say for easier maths purposes, you're essentially getting it for $11,000. So you're getting a half-priced almost Bitcoin if you buy through the GBTC trust versus buying Bitcoin. But obviously this does come with some risk, because Grayscale is heavily linked to DCG, who obviously one of their subsidiaries, Genesis, is now facing troubles, facing bankruptcy after they failed to pay out creditors post the FTX collapse. They were very intertwined with Alameda. If you watch my, 3AC, if you watch my show on the weekend, you'd know they were very intertwined with 3AC. They owed them, 3AC owed Genesis $2 billion. 3AC went down. They weren't able to pay back Genesis. And then what happened was, after the FTX collapse, there was a $2 billion hole in Genesis' balance sheet, obviously with all the people trying to withdraw off the back of a lot of panic around centralized lending platforms. They couldn't pay people out because they were $2 billion short, potentially even more because they don't keep their assets liquid, because they lend money out to different counterparties, essentially like a bank would, but they didn't have any backstop to pay out withdrawals. So they're in deep trouble. And Grayscale, also being a subsidiary of DCG, they are all intertwined. There's loans from DCG to Genesis. It's just a very messy situation. So I would keep my eye on the Grayscale Bitcoin Trust. I'd keep a close eye on DCG, because, as I said, they do have exposure to a lot of crypto assets. Any forced bankruptcy could require them to liquidate assets in order to pay out creditors. This results in a lot of their tokens potentially taking a hit. That's what we've seen over the last week. Whether or not this was forced selling from DCG, or whether or not this was selling on a speculative basis from retail just because they're DCG owned or affiliated assets, I can't tell you 100%. All I can tell you is keep a strong eye on these assets, because I guess it is worrying, and I guess it's one of the major risks to crypto now. I think if there was ever to be a catalyst, it would be a DCG acquisition or positive restructuring. If there was ever more a bearish catalyst, it would probably be the bankruptcy of Genesis, because that is kind of like the next step of contagion in the market right now that people are worried about. A lot of news relating to other lending platforms, though. We had Binance now set to acquire Voyager digital assets for $1 billion. A lot of FUD around Binance over the last few weeks. I've been vocal about my opinion on it. I think a lot of it is FUD. I don't necessarily think all of it has, a strong element of truth behind it. However, Binance is showing some strength in the face of adversity, and they are now going to acquire Voyager digital assets. So they said that they will acquire assets of the bankrupt crypto lender Voyager Digital for $1.022 billion. After a review of strategic options, the firm said that Binance US represented the highest and best bid for its assets. So the company's claims against 3AC remain with the bankruptcy estate. Any future recovery on these and other non-released claims will be distributed to the estate's creditors. The Binance US bid aims to return crypto to customers in kind in accordance with court-approved disbursements and platform capabilities. So they're going to close the deal by April 18th, 2023. They've agreed to make a $10 million down payment in good faith. They'll reimburse Voyager for certain expenses to a maximum of $15 million. So Binance coming in, helping the crypto market, which will essentially free another $1 billion back onto the market. And Rand said the Voyager bailout / acquisition should make a big difference to the market. So $1 billion of assets coming back. Obviously, in the scheme of Binance's assets, they've got over $60 million. This isn't much, but it is, I think, a positive overall for the market. And it is a show of strength from CZ. As Bankless said, seems like CZ has some more tricks up his sleeve, which is a positive. One more news piece before we get into the charts. Of course, the charts are very important today because there has been a breakdown, and I want to explain to you exactly how I'm playing it in terms of both trades and kind of long-term mindset. Before we get into that, there was one more piece of news, and that was Ren Protocol is likely to shut down. And it was a very weird way to announce the shutdown announcement, because essentially what they did was they went to Twitter and they said that they were struggling. They didn't say if they knew when they would shut down. They didn't say exactly how they would shut down. They just kind of started warning people on Twitter and said that we don't know exactly when. Depends on when the infrastructure shuts down. We aren't in control of it. Obviously, it's an immutable, decentralized protocol. Could be in the next few days or a week or two. We don't know, but we're trying to figure it out. Very weird way to announce that your project could potentially be winding down, that you kind of don't know. They just don't seem to have much clarity around it. And if you guys don't know what the Ren protocol is, it basically is a tokenized version or a DeFi application that allows you to create wrapped assets, tokenized assets of Bitcoin and ETH. Essentially, if Ren goes down, which it looks like it will, then these tokens won't necessarily have any value. So if you have the Ren BTC, if you have the Ren ETH, then those wrapped tokens essentially will lose most of their value because you can't redeem them. So if you want to unwrap them, if the Ren protocol shuts down, obviously you can't just put your Ren BTC in and get your Bitcoin out. So anyone, I don't know if many of you have Ren BTC or ETH. I know they're already trading at a discount, but that looks like, I don't know, if you haven't got your money out, maybe consider doing it, because I mean, I'm sure that the peg is already quite low, but it just looks like there'll be no more redemption soon if they do end up shutting down. There is potential for a bailout, so there's $15 million at risk. If someone bails them out for $15 million, maybe a Binance or something, then of course this could help the protocol survive. But yeah, this is just not really something that you want to see in the market, and it's just kind of another headwind for DeFi. But I guess that does highlight the risk of wrapped assets when you have redemptions on not centralized, but like a specific entity, rather than like redemptions from like a range of DeFi protocols. So I guess it does highlight the risk there whenever you're wrapping assets, and because you always need to redeem them. Remember, if you wrap one Bitcoin for a wrapped Bitcoin, it's only worth one Bitcoin in value if you know that you can get your original Bitcoin back from unwrapping it. If you use a protocol that is exploited and they lose their Bitcoin, or there's a network failure and something happens to that Bitcoin and you can't actually get it back because it's not one-to-one, then your wrapped assets obviously going to decrease in value because no one wants to buy a wrapped asset they can't redeem. And that's exactly what happened with Solana when you couldn't redeem the wrapped Bitcoin for Bitcoin on Solana, because Alameda were the ones that were issuing the Bitcoin. So whenever you're trading wrapped assets, just kind of remember where you're getting them from, who's issuing them. Like for example, I'd be much more comfortable with a wrapped Bitcoin from Binance than something like Alameda associated, or a very strong decentralized protocol that is. So that's just kind of another little update on the DeFi market. All right, let's get into the juicy stuff. Let's get into the charts. There's a lot to talk about. The first thing I want to talk about is the weekly candle. Bitcoin exhibiting what I would say is extreme weakness on the weekly. We had a weekly close, which was negative. We had a strong wick to the upside, but it ended up closing the week in the red. And to be honest, this chart does not paint a pretty picture, because we had that first zone of capitulation here, obviously just prior to the FTX collapse. Then FTX collapsed. We had another leg down. Now we kind of look to be making another top. This does look quite toppy to me. And that is obviously happening below the key level of 20K. So Bitcoin, unfortunately, from a bull's perspective, is not looking too positive. And all we can really look at are the charts right now and what they are telling us. And what they're showing us is that Bitcoin is not too bullish. If we look at the higher time frames, because we seem to be making another top. This kind of candle is never good. Whenever you see a strong wick to the upside and then a close below, especially on a high time frame like the weekly, this is never really a good sign. Does allude to further downside. The next kind of key level for me, it was this previous high in June 2019. That would be around the 14K mark. I don't expect that we're going there right now. It's also possible, we bounce off the 15.5 level, which I expect we will if we do visit there, because that's a key level. That's the last low. But the more we kind of test this low, the more likelihood that we have a breaking down. If you guys know how like supports work, usually the more time that you test the support level, the stronger the percentage likelihood is that support level will eventually break. And it's kind of like what we're seeing now with Bitcoin. And we saw that exhibited at the 20K level. We tested it once, and then we tested it to the upside. We broke above. We tested it again, and then we broke down because this level just became very, very weak, and then it eventually broke down. We have to watch out if a similar thing happens around this 15.5 level. So that's what I would be watching out for right now in terms of the Bitcoin chart. But let's go smaller time frame, because we know the weekly looks bad and we know the macro trend is down. Could there be relief over the next week? What are the charts telling us? Well, the chart is telling me two things. There's two key levels I want you guys to look at. There's the green level, which is at 16,366, and then there's the yellow level, which is at 17,344. This is the range that we're currently in. So this line in the middle, it's kind of like a less important range in my opinion. These two highlighted lines are the two most important range plays. So this is the potential scenario I'm seeing for Bitcoin. Of course, we are pretty close to support at the moment on the shorter time frame, although the weekly looks bearish. So on the 1 hourly and the 4 hourly, there's definitely a chance that we bounce here. The fact that we did wick below but then closed above was a positive in my opinion. This showed that there was strong support in this level. That was a successful test. If we do end up coming back down and testing again, there is a strong possibility that this acts as support and we do get a bounce to the upside. Now, this upside may be short-lived. I'm not saying it'll be a huge rally because you've got this next shorter-term target of 16.9, and then you have your next higher time frame target of 17.3. Now, of course, it could also go the other way. We could test and then we could break down. What I would look for in terms of a short scenario is a breakdown of this range, then a retest. Probably I'd look for a close of the 4 hourly below this level. I look for a retest that could send us down to the 1600 level. So there are ways to play this in terms of trading. And there are very strong levels that we can trade at the moment. So my next trade is probably going to be a long with a tight stop below this wick. Let's say you long at 16,370 and you set a stop at 16,238. Sorry, my nose is itchy because I got hay fever if you see me itching it. At 16,238, then this would be a good level to place a stop loss, looking for that short-term scalp trade. But remember, since Bitcoin looks weak, this is one where you want to take like profits pretty soon. This is more of a beer money trade rather than a rent money trade. So it's like a smaller time frame scalp trade. If you want to make big money, then I would wait for big confirmation. That could either be to the downside, which would obviously be retest of this level. Then we've got a target of 15.6, or a strong push to the upside after confirming above this level. So that's a key level for Bitcoin. But obviously, when we're trading, you've got to ask yourself, what is the most optimal coin at any given moment to long, and what is the most optimal coin at any given moment to short? Because if you're just trading Bitcoin, you're not always necessarily maximizing your potential gains. So I think the most important chart in crypto right now is this ETH BTC chart, because this shows us the strength of altcoins versus Bitcoin. And we can see that we broke out of this wedge formation here to the downside for Ethereum, which means that Ethereum is now weaker than Bitcoin. It was showing strength, but this is quite an ugly trend for Ethereum. And clearly Bitcoin is now favored by the market in terms of upside. So whenever I'm longing right now, I'm longing Bitcoin because it's stronger than Ethereum at the moment. Whenever I'm shorting Ethereum. So you can look at the Bitcoin chart to verify a thesis, but if you want to long Bitcoin, right now, in my opinion, it's best to long Bitcoin and not long altcoins. But if you're going to short, I think it's best to short Ethereum and short altcoins off the back of the weakness that the ETH BTC chart is showing. Now, for the Ethereum chart, it becomes a lot more simple than the Bitcoin chart. We've just broken below this key level, and we're starting to confirm above this level at 1170. So I would use the Bitcoin chart. I'd verify my thesis. If you do want to go long, then your corresponding level would be this line here for Ethereum. And if you just want kind of context on what that level is, that level corresponds with a major support level back in November 2022, after the FTX collapse, and also slightly before that when we got those wicks down in September and October. So with Ethereum, I would be shorting Ethereum and longing Bitcoin, essentially based on the dominance, and I would also be kind of looking at the Bitcoin chart to verify my Ethereum trade, which right now looks to be at 1170. So I hope that gives you guys some clarity over like the trading levels. Of course, if you do want to trade, I do so on Apex. It's a decentralized exchange powered by ZK Rollup, so it's very fast. It's on L2. They just integrated with BYBIT, so if you do want to trade Apex and you have a BYBIT account, you literally just click on derivatives on BYBIT and then go down to Apex. It'll give you a direct link on the desktop version, and you can literally just fund your wallet and trade on Apex, which I think is cool because obviously the kind of issues with centralized exchanges recently have highlighted like the value of trading on a decentralized exchange. And Apex isn't a Oracle-based exchange; it's an order book-based exchange, meaning you're actually trading against real people. That's one of the reasons why they only have 5 trading pairs, but that's also one of the reasons why they can offer deep liquidity with low fees, very, very, very low fees. So when I'm trading decentralized, I'm trading on Apex. And you can also now set your stop loss and your leverage, which was obviously previously you couldn't adjust your leverage. They just fixed it so you can adjust your leverage and you can set a stop loss pre-trade. So with Bitcoin, I'd be looking at that long. If we confirm above at 16.38, stop just below this wick. That would be my Bitcoin trade. Remember, long Bitcoin, short ETH. So if this flips the other way and we break down below and you get stopped out, that's okay, because what will happen is if you get stopped out, we'll likely retest 13.8. And then if we retest 13.8, then you can flip long to short. And when you flip short, you short Ethereum based on this level, which will likely result in a rejection and a retest of 1170. And then that's when I'd be shorting with a price target of 1156. Remember, that's a smaller trade. So that'll be like the beer money. If you want rent money, like big money, then obviously the breakdown of 1157, that's the big money. So maybe you could open a trade, take partial profits here, and then wait to see how we react to this level. Because if we break down of 1157, we could go straight down to 1100. That is the big, big, big level, because that's the last support level for Ethereum. So any trade on this thicker line at 1170 is a smaller trade until we get a breakdown of 1157, which is obviously a bigger trade. Now, that's obviously my short-term mindset. I want to talk just for a few minutes on long-term mindset, because everyone trades differently, and I've explained to you guys how I trade in the past, and that is always keeping longer-term positions and keeping shorter-term positions separate from each other. So the trading that I'm doing at the moment, that's with like 5 to 10% of my portfolio. So let's say you have a 10 grand portfolio. You've got a choice about how much you want to allocate between short-term money making and long-term money making. And one isn't independent of the other. You can choose exactly how you allocate. In fact, I think that having both is a good idea. It all just comes down to your risk tolerance and how much you want to allocate to each. So for me, I use 5 to 10% for trades, just so I can keep money ticking over. If I want to short the market, I can short. If I want to long the market, I can long, using good risk management in order to keep some money ticking over. And then I have a larger percentage of my portfolio, which is divided into a big section of long-term holds. These are your safer assets like Bitcoin, Ethereum, which I DCA into. And then I have my variable section, which is slightly smaller, which is my altcoin portfolio, which I'm a little more, how do I describe it? A little more, I guess variable I would use again to describe it, because what I do essentially is ride narratives that are hot, use that money to rotate into narratives that I think are strong at any given point, take heavy profits on green days, rotate that back into my stablecoin balance, and I use that to DCA back into Bitcoin, ETH, and some other assets at the opportune times. Obviously, when I do think like we're much closer to the bottom, then I'll go a lot heavier on alts in my long-term portfolio. Right now, I'm not that heavy on alts in my long-term portfolio, because right now it's very important to keep liquidity. And this is a big issue that I'm seeing amongst crypto when people kind of approach this market with a long-term mindset. It's the lack of liquidity. A lot of people are kind of out of cash, and if you're out of cash, I totally understand. It was very easy to kind of keep DCAing and trying to catch a falling knife into this market. But if you've learned any lesson this year, it's that liquidity is king, because there's always new opportunities. You don't need to look at whatever's pumping in the market and FOMO in. I'll just use an example right now. I'll go into CoinGecko. Let's look at what's strong at the moment. All right, XDC and Immutable X are up today. On the week, actually not that much is up. OKC is up. Let's say like you see OKC and it's pumping against the market. You're like, oh my God, OKC's up. I've got to buy. When do I buy? Last week it may have been DopeX. The week before it may have been GMX. The week before, it may have been Dogecoin. There's always something that's pumping. But you have to understand, if you have liquidity, there's always new opportunities. And because there's always a new narrative, and because there's always a new trend, you never need to chase the pumps in this market. There are so many projects that haven't run, that will run, that you can look at to position yourself in before they run, rather than trying to catch these crazy pumps of coins that are already running. So that's why I say liquidity is king, because if you have available cash, you can always take advantage of new opportunities, and you never have to FOMO into the market, because you always know when it's time to position yourself, you can position yourself. So I've been positioning myself in new narratives, taking heavy profits. The only real assets I've DCA'd into long-term are like Bitcoin, ETH, and BNB, because I'm comfortable like lowering my overall average on those coins. Alts, admittedly, I'm not going very heavy on until 2023. And I said in a tweet the other day, at some point next year, I'm going to buy heavily. I'm going to post to let you know when I am. It's going to feel wrong. I'll likely get berated and attacked in the comments, but remember, the market is always the most fearful near the bottom. And to be honest, I think there is a little bit of capitulation to come from retail. I think the worst is over in terms of the percentage drawdown, and obviously the dollar drawdown from 3 trillion to 780 billion. But I still think the market could be more fearful just from a social media indicator. There still are a lot of positive people saying that they're buying the dip, saying that they're bullish on next cycle. I think the true bottom is in when basically no one on your feed is bullish and everyone thinks crypto's dead and everyone is extremely fearful. And don't get me wrong, that fear is 10 times harder or stronger than it was 6 months ago, but it still could get stronger in my opinion. And that's kind of why I think 2023 is the year when I want to position myself super heavily, and not right now. So the market is always the most fearful near the bottom. So when you see me do these tweets, and of course I'll update you on the shows as well, that I'm buying heavily, I'll likely get attacked. 99% of you in the comments will call me stupid. 99% of people on my Twitter will say I'm an idiot for buying. But that's when I know that I'm actually making a good buy, because I'm getting attacked. So when it feels wrong, that is exactly when to take advantage. And right now, it doesn't feel as wrong as it could. It certainly feels wrong on Bitcoin ETH, but on alts, it could feel more wrong. And this maybe lines up with what Sourhog's saying. Of course, when we look at market predictions, it's very hard to predict because there's a lot that can happen in terms of macro. Jerome Powell could pivot. We could get a massive virus outbreak. We could hit like a Bitcoin miner security issue. Like, there's a lot that can happen both to the downside and the upside in terms of catalysts. But if we look at current market conditions, Sourhog says he thinks crypto will trade similar to 2019, where alts heavily underperform Bitcoin ETH because of heavy unlock schedules. Market will bottom next year, June, July. Bitcoin ETH will then both be 2x higher by the end of 2023. This Q2 thesis was something that Jordy iterated on last week's interview that I did with him. If you haven't checked that out, check it out. It was very interesting. He said he expected the market bottom around June, July. And if you guys have been watching my show for the past few months, I've been saying that Q2 was the region that I expected to bottom as well. So this kind of does line up with my thesis. That like this is right now looking like the period where I'll go very heavy, but of course that's likely to change as we get more information heading into next year. But just to give you guys kind of a bit of a time perspective on my timeline, like I'm looking at like 6 to 12 months. In the meantime, happy to DCA Bitcoin, happy to DCA ETH, happy to trade alts, because obviously there's opportunities in the short term. We could still get rallies of 30, 40, 50, 60% amongst altcoins before we actually hit a bottom. That's very, very possible. So that's why I say keep liquidity, keep capital available for new opportunities, and just make sure you're taking profits and rotating back into stables for those longer-term DCAs. For the longer-term DCAs, I've created 2 portfolios and nested. I am going to tweak these significantly this week. What I'm going to do is I'm going to position heavier in the long-term assets, and then I'm going to have a riskier trading portfolio so you can kind of define risk profiles. So if you do want to get involved and copy my DCAs, you can do so on Nested. There's a link in the description, first link. And what you'll get the chance to do is invest into a portfolio that I'm investing in. So right now we have 92 copiers, 104 in total. There's only one more slot, but if you do copy the portfolio at 105 copiers, I'm going to pick someone to win $1,000, 2 people from the comments that have also copied. So yeah, if you want to get involved. Nested's where I'm doing some of my DCAing. I've got 2 portfolios, a very small one, which is mostly stables, and then another one on Polygon, depending what chain you're on. So these will be the portfolios that I DCA into long term. So hopefully my strategy makes sense. I'm just going to go through and answer some questions now while I kind of trade on Apex a little bit. Let's just answer a few questions and then I'll head to Instagram after. Don't sleep on Phantom devs. Phantom's been pretty good in terms of the transparency they've made around both FVM updates and the runway. They recently just announced, I don't know if you saw Andre's latest post, that they're getting a lot closer to FVM, which is something that I expect to probably launch next year, but we'll start seeing like the incremental upgrades come out this year. Phantom's pretty cool, but it is a very risky alt, so it's not one I'm trying to catch a falling knife on, but it's probably one like that I'll accumulate heavier next year. But I also have a small bag just in case, kind of like as a hedge against upside, I guess. Equally biggest bag is Phantom. That takes some balls. I don't know how much money you trade with, bro, but like I would personally never have this in my top 5 holdings just based on risk profile. But I guess if you have less money, then you kind of need, like, you don't need to, but it just makes sense to go riskier. The more money you have, the safer you kind of go. So I don't know. It depends on our goals, right? I'm kind of trying to preserve capital as well as chasing upside. So obviously, if you have less money, you'll just want to chase upside. Phantom made DeFi and Phantom FUD me. Happy to ape everything into Phantom. I mean, guys, I wouldn't do that. Like, let's be like, come on. Just looking through who's going long on Bitcoin. Well, when I said going long on Bitcoin, what I meant was, if you are going to go long, you go long on Bitcoin. If you are going to go short, you go short on Ethereum and not Bitcoin. It's not saying you have to go long. You can actually go short on Bitcoin, but then you wouldn't want to go short on Bitcoin. You want to go short on Ethereum. So what I'm saying is, based on ETH's breakdown in dominance versus Bitcoin, that is the optimal project to short versus Bitcoin, if that makes sense. So I'm not saying you have to go long on Bitcoin. I'm saying long Bitcoin, short ETH is the trade right now, if you're going to trade. So that kind of gives you guys some clarity over how I'm approaching this market in terms of what I'm longing and what I'm shorting. So I'm not longing alts right now, essentially, is what I'm trying to say. I'm longing Bitcoin instead of alts, if I am going to long something, right? So is your nested portfolio copy trade? It is. So if you DCA into my nested, you will get prompted when I copy. So I'm actually going to make some updates this week for those that are invested. If you go into your nested dashboard and you're connected to your wallet, it'll literally show you in the top corner saying, Miles made a trade. Do you want to copy this trade? You click yes or no, but I'm assuming you'll click yes. And then that will update the portfolio for you. Remember, all your assets are insured by Nexus, which is covering your assets in the case of a smart contract incident. However, having insurance kind of gives us that peace of mind that it won't be hacked. I think that's an important reason why we chose Nested for this and not another DeFi protocol, because of the insurance, which is good. Always buy the dippity dip. Yeah, I mean, it depends. Buying the dip on certain assets is okay. Like if you have a 5-year time horizon on an asset, then buying the dip is totally okay, because if you believe Bitcoin will be 100,000 in 5 years, then yeah, 15K, 20K, like not a huge difference, right? You can probably buy the dip. The issue is when people treat Bitcoin and Ethereum as compared to their altcoins as the same thing, issues arise, because not every altcoin will be around in 5 years. We don't know what the landscape will look of L1s in 5 years. So if you're DCAing into AVAX and NEAR and Solana, like you're taking risky bets on outperformers last cycle. That's a problem when you apply the logic from last cycle to the new cycle and expect the old coins to perform like the new coins will. And when people DCA into those the same way they DCA into Bitcoin ETH, in my opinion, that's a mistake. Unless the asset, obviously you have very long-term conviction in, then that's okay. Like there are some assets, for example, Arweave, which I think like are going to play a huge part in like infrastructure. They have very long-term time horizons. Like even you could argue like a cash network, a Render, they might not work out, but they're very long-term plays. Maybe you can make the argument to DCA into them. Although if you kind of have my thesis that we're going to hit more lows, or at least the alts will, maybe Bitcoin holds up and the alts bleed against Bitcoin, like that thesis we saw before, then maybe next year looks like a better time to position yourself in those assets. That's why I kind of I'm more happy to like catch a falling knife on Bitcoin ETH. Impossible to know at this point. Yeah. Impossible to know. That's the point. Exactly. It is impossible to know. So you need a plan that, and I've always said this, you need a plan that exposes yourself to enough upside to be happy when the market performs, but doesn't have enough exposure so you're crying and physically and mentally and financially affected if the market drops more. So position yourself in a way that you're not depressed if the market drops and you still have conviction to stay in the game, keep your head in the game, keep accumulating the assets you want to accumulate. but also expose yourself enough to be happy when the market pumps. And unfortunately, I feel like right now, most people are doing the latter. They're exposed too heavily to the assets. They're exposed too heavily to the market. So when the market pumps, they're very happy, and they're very sad when the market drops and they don't take action. I can't tell you how many retail friends I have that were buying heavy crypto during the bull run, and now I'm not interested in touching the stuff and are waiting for new lows. And it's kind of cringe in a way, because like they were so confident Bitcoin and ETH were the future during the bull run when Bitcoin was 60K, and they were buying and DCAing and buying the dip and buying the dip and buying the dip. And now it's 16K. All of a sudden their thesis has changed. Like, what has changed in terms of Bitcoin and ETH? Do we still think Bitcoin's digital gold? Yes. Do we still think Ethereum has immense growth potential? Yes. In fact, it has even more potential now that the merge is implemented and we actually have a deflationary mechanism to Ethereum. So like, my mindset on those two coins has not changed at all. Like, Bitcoin is just a better version of gold, in my opinion. Anything digital is better than their physical counterparts, given the way of the world and where we're headed. Yes, we have SEC and security headwinds, of course, and there are regulatory headwinds too. But my thesis hasn't changed on these assets. So why would you change your strategy based on price? It doesn't make sense. If anything, we should want lower prices because our theses haven't changed. And this is what I was saying before the show to my producer, that I'm actually quite excited when I see red now, because I really, really, really do want lower prices. I'm been positioning myself in stables. I continue to stack stable coins and fiat. And the lower this market goes, as long as there's no fundamental change to the assets that I'm trying to buy, then I'm just more bullish, because I still have just as much conviction in these assets as I did a year ago, but I'm getting way better prices now. So like, you actually probably want the market to go lower. Now, of course, this does weed out some of the crap alts that don't have runway, that just don't really have a use case, that have crazy unlock schedules. But also what it does is it gives you a huge opportunities to get into the alts and also the assets that have strong potential and their fundamentals haven't been affected at much lower prices. Apex Pro's not available in the USA. I think you can still access their DEX. If not, you might have to do it internationally, but you can do so through the BYBIT exchange. I'm not going to tell you to buy a VPN, but, I'm not going to tell you to do that, technically. Hi from Melbourne. All right, cool. So what I'm going to do now is go on to my Instagram, where I'm going to pick up this conversation, because I could stream for like 3 hours here and chat to you guys. And you can ask me about altcoins. You can ask me about certain assets, whatever you want to ask me, my trades. I'll give you the exact levels that I'm trading at. So join my Instagram, link in the description to that. If you want to get involved, I'm going to click on the live button now. So we're live over on Insta. While that is booting up and while you guys are going across to there, I also want to quickly remind you that if you do have Bitcoin and you want to stake Bitcoin to earn yield, you can do so on DeFiChain. Literally, it's an app on your phone, and you download the app, you stake your Bitcoin, you earn yield, and it's not centralized. So they're not keeping custody of your assets. It's on chain, it's on the Bitcoin network, and you earn yield for depositing. So I just recommend checking out DeFiChain if you want to kind of actualize your Bitcoin in DeFi, decentralized finance. Decentralized finance, guys, it is so important at the moment. Now that the whole FTX thing went down, we've seen the problem with the centralized players. It's like now more than ever, the DeFi argument's more pertinent than ever, that we actually need DeFi. And it's funny because that's the thing that might get scrutinized by regulators, but it's the thing that can potentially save us from these bad actors and the centralized entities that have created so many issues like FTX. So I think Tom Emma, and I'll actually show you my tweet now before I head over to Insta. Tom Emma, he is saying some really cool stuff, and check this out on my Twitter if you have time. He says that the failure of FTX is not a failure of crypto, it's a failure of centralization. DeFi is the point. It's good to have congressmen standing up for crypto that are level-headed and actually understand the market, rather than people that just bash crypto and try and use the FTX situation as a scapegoat to impose more regulation on crypto. So Tom M is doing a really good job of kind of pushing the right narrative, in my opinion, which is that DeFi is the point of crypto, and that's actually how you avoid the issues with centralization. So yeah. Anyway, I will head over to my Insta now, and until then, I will see you same time tomorrow, 7 p.m. EST. Have a lovely day. Peace out.